Hello traders, the title of the video is Never Say Never, Elliott Wave Rules Trading Tips. Alright, so we're going to go through Elliott Wave Rules and what is Never Say Never, Elliott Wave Rules. That one must know. All right. So there is one of the things that traders believe is that we should not have a triangle during the second wave. All right. People will tell you that the triangle should never take place during the second wave. That the triangle should always take place. All right. In the fourth wave. Now, when we are talking about WSY wave, according to the theory, right, the W shouldn't be a triangle. This is about the WSY wave. But one thing we need to understand is that we need to know that there are rules and we need to stick to the rules, but sometimes there are exceptions, all right? So if you talk to the experts, they will not talk like this to you. They will quote the rule to you exactly as it is. No triangle in the second way. But here we are, we have a chart here. Unless my data is incorrect, unless I'm missing some information, all right, so let me know in the comment section if that is the case, that I'm missing information, I don't have enough data. Let me know, please. But looking at this here, all right, what's this? A, B, C, D, E. Now, if my data is correct, then probably this is the first wave, and this is the second wave, and this is the third wave. So the point I'm making, talking about never say never Elliott wave rule, does not mean that you should water down the Elliott wave theory. No, you should not water down the Elliott wave theory. All I'm saying to you is that you need to use the Elliott wave principle as a theory, knowing that, all right, sometime, because the Elliott wave theory is the result of many years of observing the market, trying to understand, okay, the market behaviors. That's how we have the Elliott wave theory, the Elliott wave principle, observing the market, observing the chart. That's how the person, all right, Mr. Ralph Elliott did come up with the Elliott wave theory. But it doesn't mean that sometimes there are no exceptions, like the rule again. If the second wave, all right, another rule is that when the second wave is prolonged, all right, there's a high chance that the fourth wave will be swift, talking about the time it will take. But you need to understand the rule, you need to master it, you need to know the Elliott wave rule, but you need to understand also that there are exceptions that you should never say never. Don't be surprised if, for instance, all right, the second wave has been prolonged and the fourth wave is also prolonged. There are many factors in the financial market that can force a financial instrument to display a prolonged second wave and also a prolonged fourth wave. But it doesn't nullify the Elliott wave theory. It doesn't nullify. So all you will say, well, this is an exception. Then you can talk about it and say, yes, last time we did see a case which is a strange scenario. It's not a frequent thing that we see, but we have a scenario when the second wave was prolonged and the fourth wave is prolonged also. So this is about never say never Elliott wave rule trading tips. So the reason why I'm recording this video today, because not all traders are at the same level, or not all Elliott wave traders, all right, have the same experience, all right? So I'm sharing my experience with traders because sometimes traders will say, George, why this, why that? So that's why I'm recording this video today. So second way, we can have normally, all right, the triangle, the ABCDE triangle, very often will be in a fourth way. That's why we usually see, because it's a shallow correction. It usually takes place after an extended, a strong bullish move or a strong bearish move. So the price is slowing down after a strong bullish move. So there is a kind of debate between the bullish traders and the bearish traders, all right? So if we have, for instance, all right, what we call the irregular first wave, all right, we can have a second wave that is a triangle. Because it's usually the irregular first wave is an extended first wave. So if the move is strong and takes so long, the first wave, we can have an extended second wave. And then if the financial instrument is dynamically bullish and we have again a strong bullish move, we can again have another prolongation of the fourth wave. All right? There is another Elliott wave rule that stated that, okay, if the first and the third wave are not extended, there is a high chance that the fifth wave will be extended. But sometimes people interpret the rule completely wrong. They say, because the first wave is not extended and the third wave is not extended, definitely the third wave will be extended. No. No financial instrument will go up for no reason. So, do they have the value? Are they creating value that will push investors, smart investors, to create that extended fifth wave because the third and the fourth wave are not extended? Well, if both are not extended, sometimes the fifth wave may not even be extended. So what I'm doing here is to go through the Elliott wave rule and to tell you that know the rules, don't water down the Elliott wave principle, but understand that there are exceptions sometimes. So with that in mind, when you come across an exception, you'll double check whether you haven't done anything wrong. Is there any Elliott wave violation? Everything looks beautiful. You check the higher time frame, you say, yes, everything is all right. So this is an exception to that rule. So we are talking about human beings, all right? Human beings, right? The behavior of human beings. This is about Elliott wave. That's the whole idea about Elliott wave. So when a financial instrument go out for too long, the market is saturated by the bull. That's why usually we have the fourth wave is shallow. It's just because the market is saturated by the bull. No one wants to sell, so they are all waiting to buy again. That's why it doesn't go down very much. So you want to understand that, all right? So talking about alternance between the second wave and the fourth wave, all right, is the theory. There can be some exceptions, all right. Now, the rule that we cannot water down, the rule, I mean, I'm not saying water down, the rules that when we see an exception, for instance, so for instance, one of the things that you don't want to say is an exception, for instance, if the third wave, so the rules say that the third wave should not be the shortest multi-wave, all right? That rule, we can't have an exception to it. Why? Here it is. Why the third wave? I talked about it before. Why we can't have an exception? That's an Elliott wave violation. Because according to the multi-wave, the definition of the multi-wave, the third wave should not be the shortest wave. So we can't have an exception to that rule. Now, again, another rule that we cannot have an exception for is, for instance, the fourth wave going to the range of the first wave. This is just a typical Elliott wave rule that we cannot, if you are counting wave, which means you are using the Elliott wave principle, you cannot violate those rules. You cannot have an exception when the fourth wave is going into the range of the first wave. You can't have that. You cannot have the third wave being the shortest multi-wave. You can't have an exception to that particular rule. By talking about the alternance between the second and the fourth wave, we can have an exception. It's not a violation of the rule. You see, we didn't violate the rule. All right? The rule is just telling us, okay, that when the second wave is prolonged, there is a high chance. It didn't say definitely. So we are not breaking the rule. So if it doesn't happen, or something else happen, we are not breaking the rule. But when we are saying that the third wave is the shortest multi-wave, now we are breaking the rule. Because it didn't say there is a high chance that the third wave sometimes will be a shortest multi-wave. Are you getting it now? So don't go around breaking the Elliott wave rule and just say that there will be sometimes exception. So which exception are we talking about? The alternance between the first and the second wave. All right. The rule that stated that if the first and the third wave are not extended, whenever you say there is a high chance, that rule, we can have an exception to it. There is a high chance that the fifth wave may be extended. When you say there is a high chance, there is a high probability that the fifth wave may be extended when the first and the third wave are not extended. In that case, all right, we will be talking about, all right, an exception. So another rule say that, oh, you cannot have, all right. So, or they will say, normally, we usually see the ABCDE in a fourth way. Or they may say, you can't have, all right? Here it is, ABCDE in the second way. All right? We didn't break the rule. It's just something showing up at the wrong place. All right? Didn't break the rule, all right? Or the WSY wave, they say, the W cannot be a triangle. That's the rule. So suppose you check everything, you count your wave, 1, 2, 3, 4, 5, everything aligned. You do your wave validation. The correction that followed was a triangle. You see, you look at this, you turn around, you validate, you check everything, it's a triangle. And then you have an X. Okay. And then you have the Y. What are you going to do about that? Okay, you can put a question mark on that triangle and say, probably, maybe my wave count is wrong. You can do that, okay? You can try to go into the mind of other traders and say, how other traders may see it. Then you find out that other traders may see exactly what you see. What are you going to do about that? Then you put a question mark on that triangle and work with what you got. So this is about never say never, Elliott wave rule trading tips. So this will conclude our discussion today about never say never, Elliott wave rules trading tips. As always, if you find this video useful, please let us know by giving us the thumbs up. If you dislike this video, please mark it down. Or if you think this is an essential tutorial that can help other Elliott wave traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It's free. Anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. Before we wrap it up, one more thing for traders that are trading financial instrument. So here, is this the fourth wave? Or are we going to have a complex fourth wave? Anytime you see a corrective wave like this, always bear in mind that a corrective wave can be a complex wave. As traders were here, they will be calling this session only as the second wave, and they will be expecting the third wave to start here. But here we are, we have ABCDE. Again here, if one is calling this a fourth wave, one should always bear in mind that a correction can become a complex correction. So do not get carried away and thinking that whenever there is a move down, okay, after a move up, that move down is the end of the corrective phase. There are different type of corrective wave that can appear after an impulse wave. Therefore, as we put that 4 there, we must also add a question mark to it, telling us that, okay, be aware that this may not be completely the end of the fourth wave, but looking at the stochastic, look at it like it, but we are prepared. So how do we do now? All right. So we finish our wave count. This is what we are talking about. Trade data train this. Okay, we finish our wave count now. Okay, just draw lines. It's your chart, okay? Draw lines, okay? And trade, okay? The price itself, concentrate, put your wave count aside, draw a trend line, use market geometry there, and I will draw another one like this. So these are the things we do after you finish your wave count. This one, this one here, and so on. All right, it makes sense. And again, yeah, you draw a common central line. So this one I'm drawing like this. I'll draw one like this first, this one and this one, and then I will draw another one, this one, and this one, okay? All right, and then we will draw this one, and this one like that. Okay, so this is what you need to do after you have another thing that you can also add. So you are now concentrating, all right, on the price action. That's what you are doing. Here it is. Okay, here it is. It makes sense? So until the next time, enjoy yourself. And also, of course, if you want to use, you apply Fibonacci extension, Fibonacci retracement, okay, to what is happening so far. So we put it to the top of the third wave. Okay, so normally one can expect even the fourth wave to come all the way to the 38.2%. Fibonacci retracement. Allow me to do that. I want to move, okay, of the third wave. So fourth wave can come all the way to the 38.2% Fibonacci retracement of the third wave. Or is this just, okay, the fourth wave? That's the question mark there. And we take it one step at a time, okay? Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about never say never, Elliott rules, trading tips. Happy trading to you all, and I will speak to you soon. Thank you for watching.